Welcome to another edition of the Market Review, where we bring you key developments in the financial and capital market as it relates to the economy. And today, it's a very interesting one. We'll be taking a look at the developments in the Nigerian bond market activity for July. Some things have been happening, so we'll be looking at what seems to be a very low drive of activities in that market, alongside other key developments in the capital market. We need to have this conversation. It's Mr. Ebo Ayodeji. He's the head retail investment for Hill Denham. Before we begin, let's give you a wrap-up of what happened in the market, some key developments in the market for last week. For last week, the federal government of Nigeria, through the Debt Management Office, conducted a bond auction on bonds worth about 150 billion naira across the following instruments reopenings: 13.98% FGN February 2028, 50 billion naira bond; 12.4% FGN March 2036, 50 billion naira bond; and of course 12.98% FGN March 2050, 50 billion naira bond. Also last week, the Securities Exchange Commission licensed digital sub-broker and leading digital investment platform Chaka raised $1.5 million in a pre-seed funding round led by Breyer Capital, a premier global venture capital and private equity firm focused on catalyzing growth in high-impact tech companies like Spotify and Facebook. Other participants in the rounds were 4DX Ventures, Golden Palm Investments, Future Africa, Seed Stars, and Mushta Ventures. Also last week, Total Nigeria reported an 8.1 billion naira profit after tax in the second quarter 2021 results, proposing a 4 naira dividend to its shareholders. And that's some of the wrap-up of what happened last week in the markets. We'll take a break, and when we return, we'll begin this very interesting conversation.
The ProShare mobile app, your non-stop access to financial and economic information. With the ProShare app, you can customize your preferred news and videos. You can also get access to latest financial and economic news. Watch videos related to business, economy, financial markets, and lots more. The ProShare app gives you in-depth market stats from the NSE, FMDQ, and NASD. That's not all. You also get real-time alerts. The ProShare mobile app. Information at your pace and in your space.
Welcome back. Mr. Ebo Ayodeji, it's nice to have you once again. Head retail investment of Hill Denham. Yes, the bond activity in the market, particularly the recent FGN bond action for July, amidst all the expectation, had a low bid levels, despite the fact that the bond maturity and coupon inflows of about 800 billion naira had come in. Some analysts believe that this was a deliberate tactic to create an illusion of a weak demand to keep rates elevated. But from your perspective, what led to this low activity despite the enthusiasm that was there in the market?
Okay, thank you very much. And I feel that what we're seeing in the fixed income market, if you look at it on a month-on-month basis, liquidity level in the month of July increased significantly, and that impacted on yield. So you would have noticed that the buying interest in the fixed income market increased in the month of July due to the liquidity level. Besides that, we also saw that there's been a bit of moderation in inflation rate, which points to the fact that the MPC would not be raising the rates anytime soon. So investors are also anticipating that rates might have capped at a level where we expect that rates would decline. So that's when you look at the DMO auction for the month of July, you will discover that the demand was mostly skewed towards the longer tenor maturity 2050, which speaks to the fact that based on expectation of a lower interest rate, investors are trying to lock in early and lock in at a very good rate before rate would reverse. So I won't say that, or I won't agree that it's an illusion that trying to adjust rate despite the liquidity in the system. So I believe mostly is always driven by demand and supply. A lot of investors were staying on the sidelines, trying to get a direction as to what rates would be. And we feel that there's a bit of direction now, and that is what is informing the increased interest that we're seeing in the fixed income markets.
Yes, even the July 2021 performance at the bond secondary market, it was mixed, as analysts have said. And expected maturities and coupon payment across all instruments are estimated at 1.65 trillion naira in the month of July. But what should we expect? We're in the second half of the year now. Are you optimistic that it's going to be an improved yield environment in the second half of the year? And what informed that optimism?
Okay, we looking at the direction of things. Yeah, liquidity level would reduce in August, and we're also aware of the fact that the government has also passed supplementary budget, and they will also need to borrow more. But the only factor that may reduce the aggressiveness of the CBN to borrow locally would be if they are not unable to hit their foreign borrowing targets. We're aware that the DMO is looking at exploring the Eurobond market option to raise capital, and if they're able to hit their target or even exceed it, that will reduce the level at which they would borrow. So it's going to be driven by a lot of factors, but we feel that that rates may not go up significantly beyond this level even in the second half, if there are no major shocks in the system.
There are no major shocks in the system. Rates may not go up. And of course, it's D-Day, 280th meeting of the Monetary Policy Committee meeting. We're expecting the central bank governor at the end of the meeting today from 2 p.m. to make a statement on the decisions of the MPC. But in view of the developments in the fixed income market and in extension the equities, what would you expect to see as the response due to these developments around the rates and the yield environment?
Okay, thanks. We've seen over time when you look at the MPC committee, they, they are aware in terms of using the MPR, which is the monetary policy rate, to adjust rates. It's been more of a signal, playing a signaling effect role. And we believe that with what is happening to inflation rates and also with our growth rate still a bit very fragile, we don't expect any major shift the in the interest rate. We expect that the MPC will maintain status quo. And the only adjustment we may see is that if the CBN wants to increase liquidity in the system, they may want to adjust the CRR. However, if we believe that there are other instruments that the CBN has used to adjust rates in the market, especially with the use of the HOMO auctions have been used to guide rates in the market. But on the MPC, the focus may also be more on assessing what the impact of the several intervention funds as what the impact it has played, and would also be able to know if that will also be ramped up in coming months to also help support growth in the economy. We also expect that there will also be discussion around the FX. When you look at that disparity between the official market and the parallel market. So focus would be on some of those parameters, and there will also be encouragement for the fiscal authorities for them to accelerate implementation of policies so that the growth trajectory can also be sustained in the economy.
Yeah. And inflation is still high, though it experienced a slight, it decelerated for the month of June, but it's still at 17.75%. Of course, we have other challenging indicators, unemployment, even poverty rate. What do you expect to be the outcome of today's MPC meeting? Do you expect a hold or a reduction or even surprisingly a hike in any of the parameters. Uh, take into cognizance of the fact that on other climes, we're also seeing rising inflation like in the UK, in the US, and South Africa's own decelerated also for last month, 4.9%.
Yes, thank you. So I feel that we're expecting the CBN to hold. There's really no compelling reason for them to make any adjustments because if you look at the different scenarios, if CBN trying to raise rates would try to unwind some of the growth achievements that it's put in because that would may lead to significant also increase in rates, especially the lending rates, as may be positive for fixed income, but lending rate will impact on growth, and also for a cut in rates, that may also lead to increase in uh, that may have negative impact on the fixed income market and may lead to also increase in money supply in the economy. So I believe that what may may be rational for the CBN to do now is for them to still watch. And when we see the second quarter GDP numbers, and we can see that we're moving ahead. Yes, well, because of a low base effect, we expect that the growth would be very significant, but it would be good to see a third quarter numbers, the third quarter GDP numbers before CBN may want to take increased rates, which may impact on our growth.
Okay, so in a nutshell, the holding of all parameters will have a positive impact on the fixed income market at the moment and the yield environment. Is that what you're saying?
No, I said for the hold, we believe that it means that we won't expect any major reaction in both markets, both the fixed income and the equities markets. We expect activities to just continue as usual.
Yes. And as we wrap up, this rising inflation trend that we're seeing in major markets like the US and UK, what are the implications for emerging and frontier markets like Nigeria if it continues, let's say, in the next 1 or 2 months?
Okay, thanks. I think what we'll see is that if we see that sustained increase in inflation rate there, that will impact on their on the yield on their fixed income investments, and the higher that goes, so the um, it becomes rates or instruments in the emerging markets becomes unattractive because the risk premium would reduce, and the emerging markets will need to raise their rates for them to be able to compensate for that risk that the investors are taking. So I believe that yes, some have said this is it's short, will be short-lived, but with also the third wave of COVID-19 also coming in, we're not. If it's not curtailed, there will also be need for more spending by the government to increase money circulation, which would also continue to fuel inflation in those countries, and that will lead to higher fixed income rates.
Okay, that's very interesting to note, Mr. Ebo. Last time we discussed about private corporates leveraging the market, particularly the issuances and private market activities. So how do you see that happening currently? We see a lot of activity still in the debt capital market, particularly from the corporates, leveraging the opportunities to raise funds. Is that trend going to continue? What will likely happen that may either accelerate it or impact it from moving at the pace it's going at the moment?
Okay, thanks. I think, yeah, we initially we saw a bit of a slowdown because the direction was really wasn't clear in terms of the interest rate. But what since we've been seeing that moderation in interest rate in the last few in the last few months. That has really um, helped for a lot of corporates to begin to issue the securities in form of debt. And we believe that with the current yield environment, we would expect to see that trend continues. And that's the downside. When we see very high interest rates, it's always not rational for the companies it means that the cost of funding would really be very high, and that will impact on their margin. So in the last few weeks, we've been seeing a lot of companies issue commercial paper, and we expect that trend to be sustained if these interest rates remain at this current level or lower. Will be positive for corporates, and that is also positive for growth, because we always talk about the crowding out of the private sector. But when you have interest rate at reasonable level, yes, it's always hard to balance between high inflation rates and the interest rates, but you also need to look at growth on the other side too, so that companies can be able to raise long-term capital that will be able to finance expansion, production, and as a result, that would also create more jobs.
Thank you very much, Mr. Ebo Ayodeji, Head Retail Investment for Hill Denham. Very interesting conversation around the developments in the fixed income market. And of course, today is a very, very, very significant day. We're looking out for the outcome of the Monetary Policy Committee meeting, the 280th one for Central Bank Governor. Mr. Godwin Emefiele will be making a statement, and we hope to see if he will hold like you're projecting, or if he will reduce, or surprisingly, if he would hike the rates. But all that will have its own impact on the fixed income and equities market. Thank you once again, Mr. Ebo, for the time.
Thank you for having us.
And that'll be all for this edition of the Market Review. We implore you to, if you have any question or comment or suggestion around the developments in the fixed income markets, and of course what's been happening in the month of July, you can send those comments and views and questions to otoabasi.abasekong@prosheng.com. We'll be glad to receive them and respond to you appropriately. Also, follow our social media platforms displayed on the screen to get updates on the markets, or you can visit our website www.prosheng.com, and you can scroll to the right hand of the bar, scroll down, check on fixed income and the bonds, and you would get all the latest developments in that segment of the market. We cover all the markets, from the equities down to fixed income, down to commodities and the unlisted securities. We have them all covered in ProShare. Also, you can watch out, of course, later this afternoon from 2 p.m. when the Central Bank Governor, Mr. Godwin Emefiele, will be giving his statements on the outcome of the 280th MPC meeting. Very big day for the financial and capital market, as the MPC will be telling us if they will hold all parameters, or maybe tweak one of them, or if they will reduce, or, like I said, surprisingly, hike the rates that will have implications on the market. So just follow us on our social media platforms. We'll break it to you, whatever happens from 2 p.m. Don't forget that this way you need to stay safe. Thank you for watching, and have a nice day.